Thank you for joining us at XM.com for this preview video. Dollar traders will have a lot to anticipate this week. The U.S. calendar is jam-packed after the break of the Easter holidays, featuring CPI inflation and the FOMC Minutes on Wednesday, followed by retail sales and the Q1 earnings of the biggest U.S. banks on Friday. I'm Cristina Marujos. With me today is investment analyst Cristina Bartenido. Cristina, without a doubt, the calendar is very busy this week, but what do you think will be the most important event for investors this week?
Hi, Cristina, that's right. There are several key events to watch in the US this week. Definitely, bank earnings is something that we shouldn't miss at the end of this week, since there's a lot of uncertainty about how the collapse of the San Francisco-based Silicon Valley Bank and New York Signature Bank will affect the US economy in the coming months. So it will be interesting to learn what the biggest US banks believe about that, although the Fed has already calmed investors by saying that the banking sector is quite resilient and sound. It also sees a path to a soft landing. Now, in the short term, I think the Fed's policy decision in May is what investors are eagerly waiting for, and the Fed has already emphasized that its focus remains firmly on managing inflation and that its next policy decision will be based on incoming data. So I believe that CPI inflation data will be at the center of attention this week. We'll forecast see inflation falling to 5.2% year on year from 6% previously, which could be a significant pullback, but it also leaves room for an upside surprise. The core measure, which excludes volatile food and energy prices, will be more important to watch because expectations point to a slight pickup instead to 5.6%. That would be above the headline CPI, and therefore, if that proves to be the case, it would be a worrying sign that inflation is becoming more entrenched and that the Fed may face more difficulty to fight against it. So overall, I think that inflation data will further increase the odds for a 25 basis point rate hike next month. Well, of course, the central bank has removed the sentence from its statement, which says that ongoing rate increases will be appropriate. That has somewhat signaled that interest rates are approaching the terminal rate. Though it didn't exclude some additional policy firming, and I think that a few more rate hikes could be possible given the strong labor market and the high inflation readings. Now about the FOMC meeting minutes, those may just be a reminder of what Powell said during its previous policy meeting. So I think volatility may mostly come from CPI inflation data instead.
And speaking of volatility, Cristina, let's turn to the market reaction. What should dollar traders anticipate this week?
Well, the US dollar has been gradually gaining ground over the past few days, extending higher just after Friday's non-farm payrolls report came out. Those increased the odds for a 25 basis point rate hike in May. Well, I wouldn't rule out another positive week for the US dollar, especially if CPI inflation figures suggest that the tightening phase may last for longer, disappointing those who believe that the Fed will cut interest rates at the end of this year. No, the data missed expectations by a large margin, and retail sales come worse than expected on Friday, suggesting that economic conditions are weakening and there is no need to prolong monetary tightening. That might have a negative impact on the dollar, and in this case, it will be interesting to see whether dollar yen will manage to stay above the 132.80 support against support area once again, while euro dollar may look for support around its 20-day moving average, currently seen near 1.0820.
Cristina, thanks so much. And thank you for watching this preview video here at XM.com.